Vicki Markuson. I am the CEO of the La Crosse Area Chamber of Commerce. Welcome to our chamber chat. I usually take you to our website for the latest updates, but we are anxiously awaiting the federal vote. So the vote has actually started on the House side for adding funds to the PPP, getting more money to the hospitals, better funding the EIDL loans, which is the $10,000 advance and the loan. And so I hopefully will have one of our interns give us the final vote if it happens during our meeting here, but I didn't want to send anything out to people until that vote happened, so we didn't have to bug you twice. But a couple other things that we're paying attention to. I was on a webinar this morning where a data person, I'll just call him, said that our state currently has a 15% unemployment level. And as I was saying, that's going to skyrocket because they just opened up unemployment for the self-employed, those with less regular employment. And there's a second factor in there that I'm sure Ed knows. Self-employed. Well, anyway, they opened it up yesterday, so there's going to be even a higher percentage of unemployment happening. So obviously that is the fastest skyrocketing of unemployment that we have ever seen. And then there's a third piece that we're monitoring. Obviously, everybody is extremely anxious to see what Governor Evers comes up with for how we measure when we can turn the dial, as he says on the Badger Bounce Back plan, to 1. And that would cue up that we can open up more businesses. There is a proposal out there as to what the data should look like. It's actually does not look like the Badger Bounce Back plan data. It has some varying factors in terms of where your business is located, how much contact do you have with the public. It's very industry specific. It's very localized in terms of what capacity our hospitals have, what our infection rate is, and a couple other factors. And so that will drop, if you will, tomorrow for public comment. So that's another piece that's emerging. And as I have said all along, just because it seems to be the apparent pattern, what we see is something comes out and then there's about a 2-day delay. And then the next piece that we're all waiting for tends to come out. I don't know if that's going to be the case in this one in terms of how we develop the metrics around Badger Bounce Back. But we certainly are hopeful. But where I started this whole thing was talking about funding, particularly at the federal level. And so we're all crossing our fingers that more is coming. We do know that the PPP is getting into people's hands. The EIDL has been extremely slow. I've only heard of one business getting it. I'm sure Ed's far more in touch with that than I am. But Ed is the one who pointed out, hey, there's actually what I will call an art to the PPP. So making sure if you get it that you're leveraging it is probably the best way to put it. To the best of your abilities is really important. And so we're really grateful for Ed Jaekel with JRM to come on board here and talk about the PPP. So with that, Ed, take it away.
Thanks, Vicki. So I'm excited to talk about something that I haven't talked about in 3 minutes. So it's a new topic, heavy discussions. So I'm gonna actually bring up a PowerPoint, give a quick update. I know a lot of people have heard been talked about this program quite a bit over the last 3 weeks. So let me get my screen share going here. Okay, so what I wanted to do is just start out with a little bit of a refresher about what the PPP Act is, which is basically the Payroll Protection Program is ability to borrow some money from the SBA on a forgivable loan, as long as it's used to cover payroll, rent, utilities, and some interest on some existing loans and or your mortgage. So it's a great little program. It's not overly complicated, but people seem to be trying to make it a lot more complicated than what it needs to be in some respects. 2 parts to the program, really. The first part is going to be the application process. So just a little quick recap in case you've been sleeping under a rock for the last 3 weeks. Basically, what you can do is borrow 2.5 times your average payroll cost. It's fairly simple calculation. Basically, it's 12. The look back of your last 12 months of your gross payroll. You need to make an adjustment for anybody who's made more than $100,000 in a year. So if they're have a salary of 150, you'll back off $100,000 in your calculation. From that, hold on a second. Sorry, I got a new mouse on this and it's a bit touchy. Okay, from that you can also add then into your calculation the employer health insurance benefits, employer retirement contributions, and your state unemployment taxes that are paid. So again, it's a simple calculation. The one thing I will note a little bit is that the calculation to borrow the money and the calculation for using the money are two separate issues, and they really shouldn't be combined. One is just a calculation of how much money you can actually get in the program, and it's an 8-week program that starts once you get funded, but they use 2.5 months to give you that extra money in the calculation for the things that are not covered in it. I'll talk a little bit more about that in a minute. One question we get often, quite a bit up front, is what if I'm a Schedule C and I don't have payroll for myself? So the calculation is basically the same for a sole proprietor. The only difference is that for your wages, you're going to insert line 31 of Schedule C. And again, that's capped at $100,000. So if you've got a business that makes $148,000 a year, you're going to put $100,000 into the calculation, add that to all the other employee costs. You do not get to add any additional information in there for your retirement or your health insurance benefits. So those are excluded for the owner. If you're a partnership, same concept, except for you're going to insert your K1, your self-employment income, from your K1 for the year. The partnership itself has to apply for it. The owners individually do not get to apply for that. So if you're a partner in a partnership, the entity will take care of applying it for you, and then it'll apply it to your payments. Then the question is, what do I need to provide to the bank for documentation? The bank does have to go through a process of verifying this. So the information you want to provide to the bank are the last 4 941 quarters, the state unemployment tax reports for those four quarters. We've been running a payroll report because that's the best information we get as far as getting the person-by-person payroll. It also gives you your gross pay, the clearest indication of your gross pay, which is part of the calculation. I've also been providing general ledger printouts for documenting your health insurance and or retirement contributions. Some of the banks have actually wanted to see copies of the bills, so bank by bank might have a little bit different requirements, but basically you have to prove that you've been making these payments. We've also provided a reconciliation because the health insurance part is only the employer's portion of it and the employer portion of the retirement contribution. So we have been running side calculations to provide that. If you're a sole proprietor, you attach a copy of your Schedule C, and you do not need to have your tax return completed to provide that Schedule C. You just need to calculate your Schedule C. So even if you're waiting for your tax return to be completed, have your accountant finish up that Schedule C and get it to you so you can apply for this loan. Same thing for the partner's K1. You need to provide that as documentation as well. So that wraps up the application process. Then what a lot of people that has been the dominant part of the conversations the last week is, what do I get to use the money for? Now, bear in mind, this is a loan that you're applying for specific purposes. It is a payroll protection program, so it is a program really to provide funding for a company so it keeps its employees paid. So it's and really the use of the program, as you sign up on the loan application, you are pledging to use this for only the expenses that are inside of the loan program. So those costs are your payroll costs, owner compensation for a sole proprietor or partner because they don't actually have W-2 payroll, rent paid. If you own the building inside of your business or a warehouse or something like that, the mortgage interest can be counted towards that. If you own the building and or warehouse outside of the corporation, then you will count your rent. And interest payments on any indebtedness that had been incurred before February 15th of 2020 can also be used as an offset against the loan. The employer portion of the retirement contributions and the health insurance and the state unemployment taxes. The last item I threw on there is really the comment about refinancing your EIDL loan. If you did get into the program early before this program became available, a lot of people had applied for the disaster loan and received it. You cannot use the disaster loan and the PPP for the same expenses. So if you applied for that EIDL loan early on because you're having an impact to your business and you're going to use that to fund payroll costs, they have allowed you to roll the EIDL loan into the PPP because the PPP is a much better program than the EIDL loan is. So basically you'd be quasi refinancing that amount into there. So you don't get a double benefit, but again, if you get it under the PPP, there is an option for that to not be repaid. So complete potential for loan forgiveness exists in this program. What can you not use the loan for? Basically, payroll costs in excess of $100,000 annually, and that $100,000 annual is calculated on a weekly basis. So if you take 100,000 divided by 52 weeks times 8, that will get you $15,385. So that's all that can be counted by any one person into the program. If you have an employee that lives outside the United States, for instance, you have an employee that lives in Canada, they're not going to qualify for that. So those people have to be backed out. Federal payroll taxes and unemployment taxes do not count towards it. That's the employer's cost, and that will not be counted as for loan forgiveness. Qualified sick leave. So if you've got somebody that's had some exposure to the COVID virus and they're out on the Families First Act, that does not get counted under the PPP. And one common misconception is because they listed in the wording as independent contractors, a lot of people wanted to count their independent contractors as employees. They do not count. That comment was more for independent contractors who can apply for the program themselves. So if you're paying somebody as an independent contractor, even if they're only contract through you, they do not get to qualify for your PPP. They'll get their own. So something to kind of bear in mind on that side. And then basically any expenses that are outside of those previously named, and the program is not to be used to fund day-to-day operations other than to cover those interest and rents and a few expenses that are covered in there for the employer. Other points to note is that basically a minimum of 75% of the proceeds must be used for payroll. If you go under that, it's going to impact how much of the loan can be forgiven. And no more than 25% can be used for those rents, interest, utilities, and other costs that that are not directly related to payroll. It is a loan, so it does contain an interest rate of 1%. It is, and one thing to note, a lot of people in the initial part of this were talking about whether or not they could use this to fund some equipment, other operational things. This is not available for that. It is not legal to use this for unauthorized purposes. It is a loan document. You are signing off attesting that you promised to use it for it. So if you knowingly use the money for different purposes, you can actually incur penalties and potentially fraud charges if they're bad enough. So it is something to kind of be mindful of. When I do talk with a lot of my clients about that, because they are trying to do some expansions or refinance some things, it's a simple reminder that if you've got your employees working, you can use the money that you would normally use for payroll to do whatever you want, but you can't use the PPP money for anything other than its distinct designated purposes. There are some clawbacks exist in the calculations. For instance, if you don't maintain the same employment levels as you had in the past, there will be a calculation that you will not be able to get all of that forgiven. Or if you cut pay rates, let's say you took your employees work for $20 an hour and you cut them back to $15 an hour for a while, so you can keep everybody employed. If you keep that cut in place during the payroll protection program, that will impact how much can be forgiven. A lot of people are a little bit worried about that, but if you use the money for the designated purpose, there really won't be an issue in that, because if you are down in your average payroll numbers or down in other areas, you really won't have been able to spend all the money for the designated purposes. So I don't know how much of an issue that's going to be on the math side of things when you actually sit down and calculate it, unless you go through some shenanigans to try and push some payroll where it shouldn't be. And there's no stacking of expenses in this either. A lot of people are when they first came out, called me and asked me if they could delay their April rent payment into May, so they could count 3 months of rent for this. There is no stacking of those expenses. You get eight weeks worth of expenses, which is going to include 2 months of rent, 2 months utilities, etc. It's not yet been determined if the payroll will or will not count the same way. That's kind of one of those open-ended issues that we always look for clarification. That clarification has not come. It basically just says that it's covering payroll costs. So some employers are wanting to pay bonuses during that time period. That's fine. I had a call earlier this week. One of my clients has a payroll. They'll actually be a couple of days short of counting an extra payroll in this payroll period and wondered if they should bump it up. My advice was, yes, go ahead, but it may not count. So the one thing to be reminded of this is the rules haven't been written, so we're operating under a lot of cases assumptions in these things, in these manners, just on very vague set of rules. The other points to know is that there's a very good chance you will not use all the funds for the designated purposes, so you will not get 100% forgiven. The number of cases I've gone through this week where we've looked at it, where the company is kind of a heavily payroll-based company, that 2.5 times your average payroll is getting way more money that's needed to cover the payroll costs. And there's just, like I said, that extra 2 weeks in the calculation provides more than enough that's going to cover the rent, utilities, etc. So quite a bit of the ones I've got one I was just looking at yesterday. The employer received about $215,000 in PPP money, and by best calculations, we're going to come up with about 175 to 180 in designated uses, mainly because the employer only has one facility, and the utilities are not extensively high. So it's going to be a little bit different. Apologize, my light sensor just went off in here. So anyways, it is going to be quite common where people are not going to be able to use all the money in the designated purposes. So again, some people are trying to come up with ideas whether they want to pay hazard pay or do other things to use up the payroll money, and that's all fine and dandy. We still don't know whether those will count, so I'll just caution you a little bit about that. The other thing to know about these programs is you cannot double benefit from it. So if you have applied into the PPP loan and you've already applied to the EIDL program and received funding, you can roll that into it, but you can't. If you're self-employed and you're rolling the PPP, you can't be collecting unemployment and the PPP money at the same time. And if you have employees that are in the Family First Act and they, and you're getting funded for that employee through that Family First Act, you can't double count that as PPP money as well. So some people are actually taking people out of the Families First Act during the PPP period. Others are leaving them in. It's kind of a person by person decision. The other thing is that the employee retention credit, I forgot to put that one on there, but you can't get the employee retention credit and the PPP loan. So it is kind of a pick your program type of a system. And the one other thing I'll caution you on is the rules are still being written. So it seems about every 3 to 4 days we find out something new about what something means, and we'll go from there. In fact, one of the rules that I was came across from basically one of the Small Business Administration acts implies a little bit in one of the section that utilities will include gas for your vehicle driving, for vehicles for your business. I don't see that anywhere else. That's the first place I've seen it. And it also implies that the only utility that's counted is electricity. So again, I wouldn't add any credence to that statement yet until we see more guidance on it. But there's a lot of information on different things that make you believe one way or another, but I haven't really seen a lot of concrete evidence on definitions of terms yet. So the forgiveness part. So once you get the loan done and you're in your 8-week process, you need to basically prove to the bank at the end that you have used all the money in its designated purposes. So I've got a lot of clients that are setting their PPP money aside and then basically trying to gauge the use by when they run payroll, they run the calculation of what's eligible under the PPP, transferred into their main checking account. When they pay rent, utilities, etc., they move the money across, and that's a great way to do it. And then at the same time, while you're doing those designated purposes, you can kind of gather the documentation and throw it in a file. There's a few banks that I've heard that are actually requesting for the documentation, so they're holding the money in a reserved account. And when you run payroll, you submit for reimbursement. So they're doing a little different approach on it. I think their approach basically is to gather the documentation as they go, rather than try and reconcile, hundreds of accounts all at the end. But things you need to provide to help document for that, basically going to be payroll reports, records and reconciliation of compensation in excess of the $15,385. Also reconciliation of your health insurance premiums versus the employee versus the employer, retirement plan expenses, vendor bills and receipts, easy things to get as you pay your Excel bill. Grab a copy, stick it in the file. Other things that you can use for documentation be your canceled checks, especially for like rent, credit card charge items from your credit card bill, noting that you've got a payment to proof that it's payment, or an ACH documentation from your bank statement. Some banks may want to see rental contracts to prove that agreement was in existence prior to February 15th, 2020. Also, your utility contracts. If let's say you have a utility contract to supply to supply propane or natural gas to your tank outside your building and you fill it during that 8-week period, they're going to want to see that you had a pre-existing contract for doing that. So basically what they're getting at is you can't create new expenses during this time period. And then one little note for the Schedule C companies, it's a little easier in many respects because compensation for the Schedule C is going to be automatically calculated at that 850 seconds of your 2019 Schedule C. So there's not really much you have to prove for the Schedule C owner as far as what you took for payroll. That'll be an automatically taken care of on that side of things. Now, the big question that we've had the most discussions on is how do you maximize the PPP? The PPP really came out as a program to get America employed again. The government is come out, and I think it was for the most part, other than some obvious holes that we find later on, for the most part, this program was designed to get people employed on payroll, keep them off the unemployment accounts, even if they're at home working. The context of it was really to kind of get people working again. It creates a little complexity because it came out after people were, in many cases already on the unemployment lines. And it, in a sense, it creates a lot of work. If you're fully shut down and you want to jump into the program, there isn't really anything in it for the employer. In a sense, other than you can hire your employees, you get a couple months rent, a couple months of utilities covered, but you're going to end up doing a lot of work, incurring a fair amount of federal unemployment, federal FICA tax matches. So there's a fair amount of cost that will go along with it just for you to pay your employees. So we took a kind of a big pause on the companies that are shut down and had them wait a bit to go into it. But so really, to maximize the PPP for you, timing is kind of the key. The way you can benefit most of the PPP program is to time the use of the program where you're actually going to get some productivity out of your employees. So whether that be doing, maintenance or things like that are deferred that you're going to have to spend money on at some point anyways, that's a great use of the funds because you're going to have the government, basically giving you a little bit of a support to cover those costs that you would normally incur anyways. If you're partially operating, you can have some, employees working, generating some revenue, and you can get some coverage for that. If you're an essential business, you're in great shape. But the only way the company really can benefit from this is to kind of supplant productive wages versus non-productive wages. If you're completely laid off, there's not really going to be much left for the company. In fact, there's potentially going to be a little bit of extra cost for you jumping into the PPP early. So we've cautioned a little bit about that. But again, so timing it is a little bit is essential in many respects. If you happen to be one of those essential businesses and you're at or near capacity already because you've got quite a bit of things going on, for instance, you could have a construction business that's got big contracts and so you're fully employed. This is a program you jump into immediately. You get in, you've already got these people on payroll, and you're going to benefit quite a bit on it. If you have a few people that are laid off or on furlough, you can decide whether or not you want to bring them in or keep them out. If you're one of those companies that's partially shut down, maybe 50% employment, it's a little bit of a trickier decision for you about when you want to come in. Again, the closer you can get to full operations, the more the company will benefit on this. Because the more money that will be coming in under the PPP program to replace money that you would be paying anyways. So it allows the company to hedge their bets and to kind of preserve some of that capital for the other costs and the other expenses that are coming down the line. Because profitability for pretty much every company is likely going to suffer greatly this year. But if you're partly shut down, you got to look at how shut down you are, how much you're going to program will benefit, how quickly can you get back up and running, when can we get back up and running. They've already extended the due date, the open date from April 24th to May 26th, I believe it is. So that's pushed this decision out another 5 or 6 weeks. So the partially shut downs ones have a kind of a decision of when they want to jump in because they will get some benefit for it immediately, but they just won't get full benefit. Then the other thing that I've talked with a lot of clients on that are partially shut down is, do you want to jump in early because you're going to have a little bit of an HR battle on your hands with half the people working, getting paid full rate, half the people staying at home getting paid full rate. like, you can see a little bit of a clash from some employees coming to you say, look, I'm putting 40 hours a week here, getting 40 hours of pay. And Joe down the street is sitting at home, playing with his kids all day long, getting 40 hours of work for zero, for 0 hours put in. So it's something that you have to weigh in, if again, there's nothing in it for the employer to just bring people back and pay them in the sense, because the money's going to come in from the PPP loan, go to the employees. There's no, there's nothing really in it for you guys other than if there's some productivity off of it. So you got to weigh whether you want to just have less people into the program, return more money, from the PPP, or do you want to bring people in and then rotate them through, maybe do some scheduling where 1 week on, 1 week off, kind of a thing where everybody gets a little bit of a benefit and a little bit of a shutdown. But again, the closer you can delay to when we're going to be opening up, the better. Businesses that are fully shut down, we're advising them to basically wait as long as reasonably possible. So we'll be watching this new round of funding to see how quickly it gets used up. For a lot of these, we have the applications ready to go. We've talked to the banker, it's pre-approved. They have all the documentation in place, ready to go. Then we're just waiting for when to say yes, to go ahead and submit the application. So I would highly recommend that you like I said, not only gather all the information, but talk to your banker, have them review it, find out if they want copies of the articles of incorporation. Do they want to see any other additional documentation from any of your companies, to verify. If you've been a long-term customer with the institution and you've already done loans with them, they probably have a lot of the stuff on hand. But like I said, it's worth going in and running that calculation, having everything ready to go, so that when you're ready to fund, you can go straight into it. The last thing is the old saying on this, because I'm getting a lot of questions about maximizing it. So I've been using the phrase pigs get fat, hogs get slaughtered quite a bit. There's a substantial amount of buzz in the community and on the news about various surefire ways to use all the PPP money. That you can, give people hazard pay, you can, raise their hourly rate, give them bonuses, basically do whatever you want. My only caution I've always been throwing out there is that people are reading and interpreting this are reading general rules, and this is still coming out and still evolving. But anything that you're hearing right now is not necessarily based on facts, and it's completely not based on experience. This is something brand new to all of us here. I just remind people that you're spending other people's money and they're writing the rules. So, and the rules are being written, and this law that will, if they sign this bill tomorrow or pass this bill today, that will have more rules that will come in and impact this. So the caution I have is, when you're spending your money on this program, is go ahead and use it. I would use it in ways that you would normally use it. If your company normally pays bonuses in July, August, pay them during the 8-week period. If you want to pay a little extra hazard pay, that's fine. You have some governmental funding to do that. It works out, but it may well come out of your pocket at the end. I've heard people from the aggressive side. I've actually, heard and read some things that people say they're actually going to take person by person and look back 1 year, and if you paid them $15 an hour last year, they will only count $15 an hour this year. I think that's an extremely conservative reading of it, but I do believe that, if they may go through it, and if you decide to just write a bunch of bonuses out, that they could actually come back and say, no, bonuses are not part of regular payroll. We're only going to count, 2 weeks of payroll. Like I said, if you try and sneak an extra payroll, run into that 8-week period just by paying them 3 days early, they could easily come back, and disallow that. The other thing to kind of remember on this is the banker you're working with, they're going to have to go through and review this and approve it. And just like anything else, there's some exposures to the banks on this, so they're not going to be cavalier in reading into gray areas, because they're going to be under regulations and rules and being examined from the examiners. So if they see that you've got if you pay every other week and you've got 5 payrolls in that 8-week period, it's probably going to be your banker that's going to throw it out. Because some banks may not, some banks will. We don't know yet. There's still a lot of guidance left, and every time I talk with a banker, they say they would love to know what the rules are for the end part, but they're not getting anything on it yet. Other than that, I will open it up for questions.
Okay, so the housekeeping part of questions is down at the, if you're on your computer, down in literally in the middle of the black bar at the bottom is a conversation bubble. You can type your question or you can unmute if you would like to ask your question. And while you're thinking and composing, my question for you, Ed, is, so I'm hearing these heart-wrenching stories of decisions that business leaders are having to make. And it's, here's the pain point, and you know it is, they've applied for all of these funds, they haven't heard anything, their cash is running low, and so some of them, I am quite certain, see the PPP as it's cash now to get my bills paid, and I'll figure out the loan and the payment later on. So what do you recommend for those companies that are just plain right now short of cash?
Well, I mean, we kind of saw this coming going into it a little bit. First thing we did was recommend you contact your banks, contact your landlords, see what deferral programs you can get. A lot of landlords have actually been willing to either cut the rent in half or eliminate it for 1 or 2 or even 3 months in a couple of cases. And they've either then averaged that deferred rent over the balance of the lease or tacked them on to the end of the lease so that they can push that payment out. So there's things you can do, cash wise to strap it. The one thing I have pointed out to the people that are kind of running into that is if you jump into the PPP too early, you will get a short-term benefit for a long-term loss of pain. I was talking with one of my clients on Thursday or Friday of last week. Was in a little bit of that panic as the PPP money ran out. We had talked about that and explained that it was likely to run out. Relax, they were going to bring that up as another measure. But it caused a bit of a panic, and we talked, and I've always known that she's got enough to keep the business going through May, but after May, it's going to be pretty much done. And so she wondered whether she should jump into this, and I re-explained that the point of it, that you basically just have to bring all of her employees back, put them on payroll, and there's really nothing other than 2 months of rent in there, and a little bit for her own payroll that she'd benefit off of it, and she can jump on unemployment, to cover that part of it on the short term. So there isn't a whole lot of benefit for running into that, and luckily, this employer is related to a large franchise, and they had a community call, and she did remember from in the call a week before. There's a number of her, and it's a business that's, like I said, 100% shut down. There was a number of people that jumped into the PPP immediately, had already gotten funding, and they were looking at 7 to 8 weeks before they're going to open up. They're going to get zero benefit from the PPP. Absolutely none, other than the 2 months rent, 2 months of their salary. And they're forced to bring their employees back and pay them because, again, 75% of that money has to be used for payroll. So you can't hold it back and say, well, I'll just use it for rent, and I'll use that 25% that's for me. Right there, you've disallowed on it. Because, again, I always point out to people, you sign that loan paperwork pledging to use it for payroll. It's right on the application.
I always do that. Darn it. One time per session, I swear I forget to hit the unmute. So there's a couple questions around the 8 weeks. Just to clarify, because that's really important. The first question is, so there's only 8 weeks when the money hits, from when the money hits the account to using it. That's a clarifying question.
That's correct.
Okay.
Yep.
And so the next one is, so now knowing, okay, you have the clock starts ticking. How do you determine what the best window is for that 8-week time period?
Well, the biggest thing we're watching for is when Wisconsin's going to open up. If you're in Minnesota, you've got a more optimistic outlook coming up. One of the recommendations I've been having, in many of my discussions with people that are shut down or mostly shut down is we're having that loan paperwork ready to go with the bank. We're going to drag our feet, hopefully, till the end of April, as long as we can, maybe even early May. Again, watching how quickly those funds get used. But then the bank has 10 days to fund this. And so I've already talked to several bankers and asked, hey, if we get this loan in, we get it approved, will you drag your feet for the full 10 days? And they have said yes. So that's a way you can get another week and a half extension into this. So the goal would be to hopefully get that funding into the middle part of May, because every business that's been shut down is going to have at least a few days of prep before before they can just open up the business and get going again, especially since they're going to have to institute changes. If you're a salon, you're going to have to do some changes with the chairs. You might have to put a plexiglass shield in between. I mean, who knows what the guidance is going to be. But there, you might have to have a fair amount of work that you're going to call your employees back early for, just so you can be able to open.
And then the second part of that question is, are there special rules for 501c3, so the charitable organizations or any others for that matter? Is the process the same for all?
The process is the same for all.
Okay. Next question. Everything that this person has heard is the day the money was received into your account is the start of the 8 weeks. Just again, clarifying, is that correct?
That's correct.
Okay. Any other questions out there? Anybody want to unmute and ask a question? I'm going to ask, so I'm notorious for this. I always have another question. So what are you hearing from clients? Is there a lag getting funding? Are they getting fully funded? Are some getting turned away?
That's a good question. I have actually had a few people get turned away, and they've called me up and thanked me for getting the PPP stuff ready for them, but their banker said that they didn't qualify, which I sent them right back to the banker, because there was completely a misunderstanding from the banker on that. We've seen a fair amount of things where some banks have tried to add extra qualifications to it, try to make you jump through a few extra hoops. The program's really simple. It's just go through your calculation of what qualifies and issue the loan. But we've had banks that have wanted to make people go through the usage chart and chart it out before they'll approve a loan. And again, that's not part of the SBA program.
Okay.
But, several of them have done that. I've seen a few of them where the banks adjusted number down on a more conservative basis than we calculated it. Luckily, none of them is so severe that that was worth arguing about. But for the most part, I think especially our ones in the immediate La Crosse area, those banks have been really on top of it, and really communicative with either the client or ourselves in some cases, and have pushed these things through in a fairly good clip.
Next question. Do you anticipate a follow-up bailout similar to the PPP? So we have the extension, if you will, that hopefully additional money going into the PPP, and the EIDL that's before the House today. Anything that you see coming in addition?
I haven't heard or seen anything, and quite frankly, since the PPP came out, I've been keeping my head down, just trying to get work out the door. It added about 2 weeks of extra work right in the middle of our tax season. Good program. I think what they're going to, if anything, they'll just continue to feed off it a little bit. But unless this virus takes a turn for the worse, and we have a massive unforeseen flare up, I don't see really the need. At some point, we're going to have to open up the economy and get things rolling again. So I know they keep talking about additional funding methods, but I think those things would be more, might be more directly to the taxpayer if they come out.
I'm going to do a little plug for our webinar yesterday. We had TJ Brooks, an economist, on yesterday, and he was talking about how the feds responded to this compared to the last recession, compared to the Great Depression. So it's a pretty interesting webinar if you're into the economy. But the question I have for you is, so I'll just say it. Our government has thrown us for a surprise a couple of times here, right? So we have May 26th. Hopefully that's the final one. But if somebody is anticipating, okay, we've got to start gearing up for May 26th and that date moves again, what does that look like for PPP planning?
Well, that's where you would hope for an additional funding. I mean, we blew through the initial, I think, what was it, about $409 billion in 2 weeks. If I remember correctly, just short of 2 weeks. And, the lucky part about it is the large companies have probably already been through it. So I don't think, we'll blow through the 310 as fast. And that's the high wire. I mean, when this program first came out, we knew that the 400 billion wouldn't last that long, and they would, and they would refund it. I'm not sure if I would gamble on a second refilling of the tank on PPP. So that's why our general consensus around our offices, we're watching it very closely. but we're still trying to keep people to, delay as long as they can to get the maximum benefit off of it.
This next one, I think, is more of a comment. So the comment is, we were saying this at the beginning, that unemployment is paying well, right? So 10 to 15% more than what they're earning by working. And so the comment is, didn't the government think about this? And the piece we're sending this information to our Fed, saying we've got to see a ramping down of unemployment so that they start to value working again, right? You can't say I'm not going to come back and work for you because I make more by not working. And Ed, you had before we let everybody into the meeting here, you had a comment on unemployment and what employees can and can't do.
Yeah, I've been getting that question a lot. A lot of my employers have been afraid that when they try and call people back, they won't come back. And I usually kind of put them at ease. They say it's not their choice. When you call them back to work, if they choose not to come back, they've effectively quit. Because I don't think the rule was written with the intention of paying people more than what they make, but quite frankly, the state unemployment departments don't have time to process the volume of applications. So I've heard they just basically turn on the $600 and just pass it straight through. So in that sense, there are a lot of people that are making more money than what they were when they're working. That's taking a lot of the pressure off of it. And quite frankly, it's taken a lot of the pressure off a lot of my clients because their employees are not suffering sitting at home financially. When they run out of their Netflix, things to stream, that might be a different issue, but financially they're fine, and they're able to make it. A few of them had when they shut down a little bit late, their employees didn't get processed for several weeks, so that was a tense spot for the employer quite a bit. Because let's face it, all of our employers care about our people. And when you've got somebody that doesn't make a ton of money and they're not collecting anything for weeks at a time, it stresses everybody out. But given the fact that they don't have that financial stress, it's letting the employer set back a little bit and kind of pause a little bit, let them take care of the unemployment program for a little bit before they jump into the PPP. And then that'll, like I said, give you another 8 weeks to launch back into, your hopefully more normal operations.
Yeah, and we all have to remember too that 600 is nationwide. The $1,200 check is nationwide, and our cost of living is low. So $600 to us is a lot of money versus somebody living in a higher cost area. It's not. So that's the unfortunate component of just a widespread dollar amount. So a couple more questions. If the employer has to lay employees off, has to lay off employees after the 8-week period ends, will that impact the amount of forgiveness? So this
No,
is
once the 8-week,
Yep.
yeah, once the 8-week program is done, this is done. So anything that happens after that will be, just business as usual. I think the federal unemployment goes out quite a few weeks. I don't remember how many off the top of my head, but so they'll still have that opportunity afterwards.
Okay. Next question. For the smallest of businesses, 10 or fewer employees, sole proprietors, etc., do you have any general advice regarding selecting PPP versus EIDL? And I'll read the second part after you answer that one.
Okay. Actually really is no choice on that one. An EIDL is a loan. So I think it carries a 4% interest rate. You have to pay it back. The PPP is technically a loan, but as long as you use it to pay payroll, and for the vast majority of the client base that I work with, almost everybody has the PPP being a better impact than the EIDL loan. There's only EIDL loans we've only recommended in a few cases where they don't have payroll, like they might be a rental company, and they've been drastically impacted by people not paying rents. Then they can have some qualification for the EIDL loan. But if you have employees and you have payroll, then PPP is heads and shoulders the best program for you.
Okay, the second part of that question is also, can UC be used in addition to EIDL when circumstances require?
Can you re-ask that one quick?
Yeah, it says UC. I don't know, Heidi, if you meant unemployment or UC. Does that make sense to you?
Probably unemployment compensation.
Okay, that makes sense. To be used in addition to EIDL when circumstances require.
Yeah, if you're going to go the EIDL route, then where you don't have work for people, then you've got to basically not have them on payroll. But again, you have to go through the idle application, and you're applying for a specific purpose. And one of that purpose is funding, day-to-day operations, which is payroll. But to my knowledge, there's no direct tie, to that. So you can use those two in conjunction. But again, if you have payroll, there's really no choice as to which is the best program. That the PPP is, definitely the best. So there is one confusion though that I get quite a bit is people think you can do both the PPP and the idle, and that is not the case generally unless you have another purpose for the idle loan other than payroll.
So someone who I was trying to help, trying being the key word in that, who I was trying to help this morning. So her bank account's been depleted. She's waiting to hear on any of these financial pieces. She's chosen to pay out payroll, and she still has to reemerge, right? So there's going to be costs to coming back. Regardless of whether she gets the funding or not gets the funding, how are you advising people on saving some money or allocating some dollars to the bounce back, the reboot?
Yeah, that's a good question. I mean, the one thing that the payroll protection program will get you some cash right away. And I know I'll have to defer to one of the bankers in the crowd or whether or not this is legal or not, but you'll have some cash in the account that can kind of help you with a little bit of those costs as long as you have some revenue right away to replace it. So if you need to use a little bit of the PPP money to just get through a few days to get open, it's not necessarily the worst use of the funds. I wouldn't be risking the substantial amount of the PPP money doing that, but if you need to get $5,000 of it to just get the operations up and running again, you'll earn some revenue, so you'll be able to replace that for the designated purpose.
This is more of a comment. I had a small business owner point out to others that this isn't going to be a light switch going back on in businesses. So this does not mean, oh, great, we're now able to open and business is going to be at 100% again. So how are you helping that businesses navigate through that painful time period if doors are open, but the business is not fully up and running?
Yeah, and there you just have to rely on more of your traditional business sense. You may have to start playing with hours, schedules. You maybe bring people back, but everybody's rotating on 30-hour-a-week schedules. Obviously when you have the PPP, that's why they did it. So you can, get people in there, employ them, and then hopefully that the business will come back during that 8-week period. Mm-hmm. But short of that, you really kind of have to look at how much business you've got, what your employee needs are. And then like any slow period, I always recommend people, if you don't need them, don't pay them. I mean, if you only have 20 hours of work for them, you pay them 20 hours of work. The important thing that the business has to remember is it has to survive. First and foremost, the business has to survive, make a profit so that it can pay its vendors, pay its employees. If it doesn't survive, it's all academic and it's a moot point. Your employees are going to go on unemployment and you're going to end up closing. So focus on doing what you can do to keep the business alive.
Last question from me. So there was also discussion right as we were entering Safer at Home about gift cards. So obviously there was a big push to buy gift cards from your favorite restaurant because those restaurants need the cash. There's an inclination, of course, for the businesses to dip into that cash, especially if they're not segregating those dollars to go cash is cash, and then come opening and people go and use those gift cards. Now we have an issue. How do you advise businesses taking those gift cards to, how do they use those right now? Or not?
Yeah, I mean, I don't know if it'll be necessarily, that big of a deal. Restaurants have to go through a massive amount of sales in the December area for, Christmas. So they get a substantial amount of revenue and it typically comes in over years. A lot of it gets used up in the first 3 to 4 months. But a lot of it takes, a substantial amount of time. Just personally, I know we get occasional gift cards and it can take us six months to, sometimes 2 years. Found a couple old ones in the drawer. So I don't think I don't think that will be necessarily a thing. I think still the gift cards is a great way to do it. Probably the bigger risk, with some of the small restaurants that are on the bubble, if they take a bunch of gift cards and don't make it, they won't be able to honor those. Yeah. So that's about the biggest risk in my opinion.
Yeah. And my last comment on that, the restaurants were saying, actually, it's more helpful if the day the doors open that you're not coming and cashing in those gift cards, because essentially they need all the cash they can get for a period of time here just to help them in those initial days. So, well, Ed, there are no more questions. Thank you so very much for joining us. We haven't seen anything on the federal front in terms of, I'm looking for a text here, but nope, nothing on the federal level in terms of the vote that's happening right now on the extension of the additional funds for the PPP and the EIDL. So we'll get that out to people as soon as we hear something. So thank you so much for your time, Ed. Thank you all for joining us. And I think we don't have anything scheduled until next week. So we'll see you next week. Thanks, everybody.